When you think of Nashville, Tennessee in the US, you might conjure up images of cowboy boots and the vibrant country music scene. Since the 1920s, the city's been attracting musicians who have transformed the country music genre from the hillbilly music of the 20th century to the slick Nashville sounds of today. Nashville is the capital city of Tennessee and now has a combined population, including the surrounding counties, of around 1.9 million. Recently, our very own Ben Crow visited Nashville to attend the CFA Wealth Management event and join some of the global leaders from private wealth offices from around the world. So we welcome Ben now, and we have some questions for you, of course, about the recent trip. The Professor of Finance at Santa Clara University, Mia Statman, spoke a little bit about accumulation to decumulation. Can you tell us a little bit about your key takeaway from his presentation, in particular regarding those who fit into the buckets of wealth, steady middle and precarious middle income brackets?
Yes, Mia, an industry veteran, has written a book on the subject titled Finance for Normal People, and fascinatingly, genetics accounts for approximately a third of the differences in the saving behaviour of the three buckets. People are also creatures of habit, and the same habits that help us to be good savers when we're younger actually also make it more difficult for us to spend when we're older. The precarious middle bucket tends to link up more pleasure to consumption today versus the long-term benefit of more savings in the future. Most of us would be familiar with the marshmallow test with school-aged children, the difficulty the kids have passing up the marshmallows, even though they have the promise of more marshmallows if they can delay the gratification for just 15 minutes. Conversely, people who fall into the wealthy bucket, who have proven to be excellent savers over their lifetime, may have difficulty spending in decumulation on things and experiences which would bring joy and fulfillment. Whether it be effective structure for savings or lifestyle spending later in life, we're here to help with customised plans for both accumulation and decumulation phases.
So did you say that genetics count for a third of behaviour?
Yeah, absolutely. One third is based on the genetic contribution of both mum and dad. And interestingly, the behaviours they instill at a young age are actually lost by the time we reach the middle age.
Now, I believe Scott Welch, who's a Chief Investment Officer, spoke on the topic of behavioural finance theory. Can you tell us a little bit about the behavioural finance concept and what that might mean for our listeners?
In essence, behavioural finance is the study of why seemingly rational people make seemingly irrational decisions when it comes to finance. Sir Isaac Newton famously said, "I can calculate the motion of heavenly bodies, but not the madness of people." And that was when he's reflecting on his own personal experience as a South Sea bubble in the 1720s. One of the key findings of behavioural finance is that investors have an asymmetrical view of risk. Bad outcomes produce more pain than good outcomes produce pleasure by a factor of about 2 to 3 times. The good news is that we can set up the game to win by taking a goals-based approach to personal financial planning. Focusing on the end game helps us to be less caught up in the day-to-day distractions, which could potentially shift our focus away from the bigger picture.
Do you see that happening, that people lose sight of the end game and things that are happening, they tend to make rash decisions? Is that normal?
With the level of information that's coming to us in this day and age, it's very easy to get caught up in those day-to-day distractions.
Was it worth going to this event?
Oh, absolutely, across a number of different levels, as well as the boots on the ground insights of some of these leaders.
Well, tell me, what are the key takeaways that you had from the event that you found particularly interesting and would like to share with our listeners?
I guess from an economic perspective, the shift away from central banks being the most important influence on the world economy and the rise of politics and populism globally. The recent US election left their nation separated on the new leader, Donald Trump. However, consumer sentiment is now reaching levels not seen since the early 2000s, which is a particularly strong economic indicator. Everywhere you looked in Nashville, there were signs of growth and construction activity at a boots-on-the-ground level, and that would be reflective of their very low 4.7% unemployment rate. We'll be paying close attention to the changing political landscape at home and abroad for investment trends and opportunities these may create. Closer to home, capital gains and negative gearing policy, for example, in Australia, we think will be very influential as to who we choose to be the leaders in our country here.
Do you think this boom that's going on in the United States now, since Donald Trump, is going to continue for some time? Any idea how long?
Well, there's a concept of animal spirits, and there certainly appears from the indicators that we're looking at, animal spirits has been reinvigorated, and that's shown in the economic activity that we've seen, both at a boots on the ground level and at an economic indicator level.
Cowboy boots on the ground level. Tell me, will this reflect then in Australia? Will this same thing happen to us?
We can see that happening now with some of our various political leaders and party members at a local level, and also if we look at the influence of policy in terms of who we may elect to lead us going forward. So trends we'll definitely be paying very close attention to and shaping the future investment landscape.
Well, thanks, Ben. Thanks so much for joining us.
Thanks, Greg. Thanks for having me.
Well, it sounded like a great event. Now, this brings us to the close of this special feature. At AJ Financial Planning, we're committed to sending our team around the world to events such as these, to seek the latest investment ideas, training and trends. And we strongly believe that this point of difference sets us apart and keeps us ahead in our field. And as Warren Buffett famously said, risk comes from not knowing what you're doing. So put your financial dreams and aspirations in safe hands and speak to the team at AJ Financial Planning. The advice provided on this program is general advice only. It has been prepared without taking into account your objectives, financial situation or needs. So before acting on this advice, you should consider the appropriateness of the advice and consult a finance professional. If any products are detailed on this program, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future performance.